So I'm gonna do two trade reviews here. I'm gonna try to do a winner, and then I'm gonna try to do one that didn't work out exactly the way we wanted to. Let's start with DJT. It's a pretty obvious why we're trading DJT right now. The election is in less than a month, but we're only going to trade this to the long side. We don't see any reason to trade it to the short side. We don't really borrow shares for shorts or anything. If anything, we do trade shorts, but it's we buy the inverse ETFs on major market ETFs. So, but anyways, let's look at DJT. So we're not involved in DJT during this whole thing. It's really a downtrend, and we're just waiting on it to really start turning up for the catalyst to get closer. So the one thing that I'm looking at this point, I see it start moving up. I'm really worried about this bar right here, which is the main volume bar. I feel like true edge comes from looking at these rate of change bars, which a rate of change bar is just a bar that's sticking up between the previous bar and the next bar. That's where the decision points are going to be in charts. And it really doesn't matter how large the bar is to us. It's just, is it a rate of change bar or not? So technically, if I had software that could eliminate all the volume bars besides the rate of change bars, that would really be helpful, but I don't have that at my disposal. So as it's coming up, I see that it's testing. I would have had a red line right here to show me the resistance. It's testing that. So our model would still be bearish at this point, especially with this decrease in green bar volume. So what's important is these red bars. So we've tested this main bar right here. We've got a red bar, but I'm looking at the next rate of change bar. So here's one right here. It is on September 25th, and here's one right here on Friday, September 27th. This bar right here is where it actually comes down. I would have had a green bar. I would have had a green line right here. It would have been like this, because here's the top of that rate of change bar. And a red bar came down and tested it, meaning here was the seller's chance right here. They came down. This is a red bar with decreasing volumes. So the sellers had their chance, and they come against these buyers right here. So I would have flipped the model bullish on the formation at this point. The bullish formation accounts for 50%, or the formation part accounts for 50% of the model. Price trend and day volume bar are the other 50%. I'll get into that in just a second. So I would have flipped this to bullish formation. Well, the price trend is still bearish because I use a 3-bar. Basically, I'm looking at the 3-bar price trend, not counting inside bars. So as soon as one of these bars over here take out the last 3 bars, so in this case, it would be this one. So here's one bar that matters. Here's another bar. Here's another bar. So once this is taken out, then the price trend will flip bearish or bullish also. So now over here, I would have had a small position right here, even though the price trend was bearish. And I can show basically the model is a calculation. It's 50% formation, 25% price trend, 25% day volume bar. Because this is a bullish volume bar right here, meaning it is increasing volume, not much, but it still is. It took out the high of this previous bar. We had a small position on the open of this bar right here. When this bar right here happened, then we've got all 3 things pointing bullish. We've got the formation, which was coming against this rate of change bar. We've got the price trend, which is now this bar taking out the tops of this bar. And this is as bullish as a volume bar as you can get. It is an increasing volume green bar, and it took out the high the previous day. So all the evidence is pointing to full bullish. So the next day, there's a good one. We're still full bullish. We will have our biggest position on. Here is also, I wouldn't say it's completely bullish, but it definitely isn't bearish. I mean, you've got the sellers had a chance to come in here and take this thing down, and all they could do is an inside bar with decreasing red volume. So although it's not as bullish as this bar, we would have still had a significant position on right here. Again, right here is another increasing. We're back to full bullish. So this is Sunday. On Friday, this is more of a bearish bar. So we would rate this as a negative 0.25 in our day volume bar. So on Monday, we will decrease our position some, but we'll still have a significant position. Why? Because the formation is still bullish, and the price trend is still bullish, even though the day volume bar is a little bit bearish. So looking up here, we don't see any resistance in these rate of change bars to the left, looking left, until we get up here to this one. So here we go up here. So this still has a lot of room to run, in our opinion, and we'll see how it plays out. What would start stopping us out is if the price trend turned bearish, along with some bearish volume bars. And if it came down here, so now this low is what matters on the formation. If it came all the way down, we would already have a much smaller position if it came all the way down this far. But if it takes out this low right here that we used as the bullish formation, we would flip the formation to neutral. It would go in this category. So we would have a very small position by the time that happened, and that would probably completely stop us out. But we expect this to be a winner going into the election. We don't see any reason why this would sell off. And we'll probably drop DJT from the model sometime after the election because the catalyst will have passed. So let's look at one that didn't quite work out the way we wanted to. Is GDX. So here's a nice volume bar. We were probably neutral up in here. I can't really remember, but I know here it became on radar, and I was beginning to think that we should have been bullish down here. Here's some rate of change bars, but I think it was neutral. So we started getting a small position here, but this is right here, this rate of change bar right here, the one that was a nice buying bar. When it came down with these red bars and tested this rate of change bar, I flipped bullish. So we established a position right here, I remember, and I felt nervous about this. And this is, I kind of dropped the ball right here. When it got up here, I should have flipped the formation to neutral because it completed a measured move right here. And I look for really any reasons to come off the bearish or bullish stance and flip to neutral and just let price and volume handle it. Unless it's a situation like DJT where I really can't see any resistance. But if you do the math right here on this measured move, it completed. And the fact that it was really overbought, I should have flipped the formation to neutral, and that would have reduced the position pretty good. So I had to ride this down right here. I left the formation bullish, and I had to eat this bar right here and this bar right here. I ended up getting out on this day because this is an extremely bearish volume bar. And let's see, it didn't flip the price trend, but right here, it definitely flipped the price trend. So, but like I said, there's a next evolution of price. And so I flipped it. The formation was still bullish right here, but the other parts of the model stopped us out. But look right here, here's a rate of change bar, here's a rate of change bar. So when you can come up here and you can put a red line right here, bam, because here's the volume of that rate of change bar. Here's the bottom and volume of that rate of change bar. Well, look at this bar. From Tuesday, October the 1st, it came up and tested the bottom of this rate of change bar on lighter volume from the previous. So the buyers had their chance. They had their chance to take this thing up, and in our minds, they failed. The price trend is still bearish, but we would flip the formation right here to bearish because they had their chance. They couldn't do anything with it, and look what happened. We rode that down for a nice bearish gain. We got short up in here via dust, which is the 2 times bearish ETF, and we rode that position down, which was a nice gain. What I should have done, we just stopped out of this up here, so we gave some gains back. This rate of change bar, I should have flipped back to neutral again. I kind of sat on the winner, and I should have flipped back to neutral. But the great thing about the model is it started stopping us out right here on this bar, because this is on this bar. This is a very bullish bar, and it flipped price trend 1, 2, 3. It took out that high, so we get out. So we get out right here. But here's the thing. Look at this bar right here. We're still bearish formation. We should have went to neutral down here, but look at this. It's actually right here. Look at this rate of change bar. This is a shelf. This has to get through this area right here. Well, it did, but it's still, I haven't seen a red bar from this. Now, we don't have any position on this because this bar was very, it's not bullish. I would say it's neutral, if anything. But this bar right here is green, and the buyers had their chance going up against this shelf. And then here's that rate of change bar right here. It tested the top of it. So the volume, the significant rate of change volume, is still above price. So the buyers had their chance. This is kind of a bearish bar right here. And the model is telling us to have a small, I think a third of our position on short starting on Monday. And we expect this to come down. Now, here's another rate of change bar. Like I said, the model is constantly evolving. Every day it has new inputs. So we're going to have a small short position, and we'll see what happens. But this red bar I would put up here now, because now if this comes down and has a red bar, tests this one, and then comes and takes out the top of this bar, that would be a change in character, and I would need to go bullish on the formation. So the model is complex. It's from 17 years of my trading knowledge. Everything's gone into the model. So we'll see how GDX plays out. There are times to where we flip from bullish to bearish in one day. It's just according on how things. I am a slave to the price action and the formations of what I see. I have no bias. These are tickers that we trade. These are the major market ETFs. They have plenty of volume, so I'm not going to get fooled by some big buyer come in on a small cap stock and wicking me out or showing me something that's really not there. We're looking at millions and millions of volume in these ETFs. So one buyer's not going to be able to come in, or even 2 buyers, and sling this thing around. So we need that for the model to make sure that we're safe. But I hope you enjoyed these trade reviews, and I will talk to you later.